Thank God it's Friday, and thank God we do have 55 minutes to do business here on Business Incorporated. Here's what we have prepared for you on this episode of the program. World Bank is planning $90 billion to electrify Africa. It's underway. And ahead of the MPC meeting here in Nigeria, which begins on Monday, there are different perspectives to it. And Zimbabwe has injected $64 million into its foreign currency market. Talking about looking for a balance. Good afternoon, I'm Ini John Mekwa. This is Business Incorporated on Channels Television. We'll start from the global space as usual. Oil prices, which eased on Friday, were on track to end higher for a second straight week following a large cut in United States interest rates and declining global stockpiles. Look at Brent. Brent dropped 26 cents, that's 0.4%, to $73.62 a barrel. WTI also down 0.2%. $71.80 a barrel. And of course, eyes on those the cuts from the United States Federal Reserve, which happened yesterday. And now the benchmarks have been recovering after they fell to a near 3-year lows in September 10. And prices pared some gains today, Friday, after rising more than 1% on Thursday, following that interest rate cut by the United States Federal Reserve. We're still in the global space now. Gold lingered near record high levels on Friday and was on track for a weekly gain after the Federal Reserve's recent supersized interest rates reduction and on signs that further cuts were on the horizon, according to comments coming from that meeting. Look at the numbers right there. Spot gold went up 0.2% to $2,952 per ounce. Palladium also went up 0.6%, $1,086.75. And then platinum is unchanged at this time, $988.30. Spot silver gained 1%, $31.09. Spot gold, as I said, went up 0.2%, $2,592.17. Still hovering around the 2,500 level, while U.S. gold futures also went up. Everything is in the green. I believe even the Asian market will have the same numbers. And we see that U.S. gold futures has now gone beyond the 2,500 level, $2,617.30. So good news for everyone after that cut by the United States, and even better with indications that we may have more cuts this year, 2024. We come to Nigeria now. The Nigerian Communications Commission says that it is planning to deploy the 6G spectrum in Nigeria to expand access to Wi-Fi technology. In a forum which had in attendance stakeholders in the ICT value chain in the country, the NCC is seeking to enlighten and get buy-in of all concerned in the adoption of the new technology. It's a stakeholders consultative forum on emerging technologies. The focus here is the use of 6 gigahertz, referring to the frequency band between 5.925 gigahertz and 7.125 gigahertz. The implementation of this, which is expected to at least double the spectrum available currently, should increase internet penetration and the benefits that come with an 80 megahertz or 160 megahertz channel for Wi-Fi.
Wi-Fi plays a crucial role in the distribution of fixed broadband connectivity in homes, offices, and various other environments. The vast majority of home internet traffic is connected to the end user through Wi-Fi. In enterprise settings, Wi-Fi is essential for handling large amounts of data and simultaneously connecting large number of devices with improved reliability, higher data throughput, and lower latencies.
5G socio-economic benefit in Africa by 2030 is projected to hit $26 billion. The need for this and similar conversations are captured in the projection that artificial intelligence will lead to $15 trillion gain by 2030. Internet of Things will hit $11 trillion, 5G, $8 trillion, cloud computing, $1 trillion, while cybersecurity risk hit $5.5 trillion in 2023.
So as is today, we have an overcrowded airwaves that are currently limiting the potential of Wi-Fi deployment in the 2.4 gigahertz and in the 5 gigahertz bands. And as a result of that, it is not a surprise that today more than 70 countries, and the number is really counting, have already acted and opened this Wi-Fi 6 gigahertz, or some of them are considering acting to open the 6 gigahertz band for unlicensed Wi-Fi use.
While the idea of upgrading is enticing, in reality, stakeholders are calling for caution.
As Nigeria seeks to leverage this spectrum, our policies must be aligned with international standards and best practices. This will facilitate the adoption of globally compatible technologies, fostering trade, collaboration, and innovation.
Before we can, upgrade to 6 gigahertz, there are a lot of things that needs to be considered. So we are just pleading with the NCC. I will not say into details, that we need to do the needful in providing fund for the sector.
It's no longer news that the future lies in the digital economy, and Nigeria needs to be part of it by constantly upgrading facilities and infrastructure in the information and communication technology space. Economist and Professor Ken Ife believes that managing inflation in Nigeria is complex and different from what is required in other countries. Consequently, Nigerians should manage their expectations from the forthcoming monetary policy meeting. Professor Ife believes that the MPC may have to hike the MPR again in the September meeting, which starts on Monday, September 23.
Two things that the bank is going to be looking at. One is how much of imagine a country where you have almost 100 trillion naira in circulation, and the GDP of the country is about 240 trillion. I mean, that is huge injection into the economy. It will take a finite time to run that down. Although many things are happening, the bank also has other tools like open market operation and treasury bills and all of that. But it will do its best to continue to suck out oxygen on the demand side. But of course, the second one is that, remember, ECOWAS macroeconomic convergence criteria, 10 of them. One of them says you have to have a positive interest rate. Here we are on negative territory because the MPI is on 26 points and then the inflation is on 37 points. You still have a gap of 11%. So a natural tendency is for the MPC to try to close that by constantly increasing to the point where there will be an inflection. That's one tendency. And then, of course, against that tendency, you have to look at other things. So it will not be surprising if they still decide to increase the rate, however small.
However small, well, we'll see that meeting which begins on Monday. Now, the managing director of Modo Anti Limited, Mr. Joko Okupe, is convinced that a more robust public-private partnership in Nigeria will boost revenue of subnaturals. Mr. Okupe, who was a guest of Business Morning earlier today, believes that the missing factor is enabling environment.
If you look at the technology space, for example, the digital space, for example, in the economics of the world, there's so much that is happening in that space, that government can tap into, such that income generation or revenue generation does not even necessarily come from the citizens alone. The digital platform is a global platform. There's always need for people that want to do things outside of the country to get information of what's happening in the country, to get valuable input. And within the framework of government, there are so many of such platforms that can be created, that can begin to generate new streams of income for the state. There are also developments technologically, even in the energy sector of the world, that makes it possible for energy to be provided in clusters, such that you are not engaging in establishment of huge infrastructure. Now, if that comes in and there is an enabling environment that government creates, for the partners, to come in, it obviously should be something that should work.
Now let's head to New York, where the 79th session of the United Nations General Assembly UNGA is on the way, begins officially on Sunday, and marks a crucial milestone in the global effort to accelerate progress towards the 17 Sustainable Development Goals. And there are some conversations that have already started even before the meeting. Now let's delve into that. I know you might have seen Laolo Akonde, a channel television analyst, who is right there. We also have our correspondent, Lanre Lasisi, there. So in the coming days, it's going to be a busy day for them. And trust us right here to keep you on top of conversations. Now we have Laolo Akonde joining us from there. Well, good morning. You're in New York, so it's morning at this time. And I know you had to wake up early for this. We appreciate that. But I mean, you're going to have to do this very much, even much more in the coming days.
Yeah, good morning, Hini. Actually, there are three sets of events that normally mark this annual gathering of presidents and head of states at the UN. So there is what is called the Action Days, convened by the Secretary General of the UN, in this case, Mr. Antonio Guterres. That is actually starting today. With a conference around the idea of youth and future leadership. So the action days are today, Friday, and tomorrow, Saturday. There's going to be a lot of side events, silent events around that action days. And then on Sunday, like you rightly said, they will now start the Summit of the Future. Okay? The Summit of the Future will take place 2 days, that is Sunday and Monday. And that is where the head of states are expected to start participating actively. As a matter of fact, we are being told that over 130 heads of states and governments have indicated interest to participate. And most of them will be arriving over this weekend. And then on Tuesday, that's when you have the peak of it all, the general debate of the General Assembly. And that is when all the leaders, starting with the President of the United States, we start to address the General Assembly. All right.
It's going to be a busy schedule, obviously, but we have our eyes on the expected conversation, which has already started even before now. That's international financial architecture, the reforms of it. The Global South are asking for fairness and reformed architecture in this area. I wonder if there are conversations that are already building towards this.
Yes, you're very correct, Ini. As you know, for quite a while now, there has been the conversation and the narrative around the inequitable nature of global financial architecture. Namely, you have many of the poorest countries paying or spending much more of their resources on paying debts and spending less on education, health, and even infrastructure. As a matter of fact, it is said that when you put together what poor countries spend on health, education, and infrastructure, it doesn't come close to how much money they are spending on paying debts. So that is one big aspect of the conversation that has been going on, and that will be featuring big time in the Summit of the Future. Now, the Secretary General of the United Nations, Mr. Antonio Guterres, actually came up with the idea and convened this summit to try to say that, look, if you look at the current financial architecture, to use his exact words, it has grown to be outdated and ineffective. You recall that when the Bretton Woods institution was formed, just I think about 45 years ago or thereabout, you had, at the inception of the UN, I guess, you had about 45 countries that set up the what is currently the global financial architecture. So the Secretary of the UN is saying that, look, the world has changed. That system has become ineffective, and it's important now to begin to see how it can be overhauled. so that nations have a fair chance. People who are in poverty, several parts of the world, including our country, by the way, can get more consideration so that more money can be spent on human capital development. You can deal with poverty, you can create more opportunities, and then people can spend less of their resources on debt. These are some of the conversations that have preceded this idea of the Summit of the Future. And it's going to be very interesting to see how this shapes out, starting on Sunday when the Summit of the Future will kick off here in New York.
Interesting indeed. And of course, in the coming days, as you said, from Sunday, we would be doing a lot of crossover both to yourself and Lanre Lasisi. But thank you so much for joining us this afternoon, and we look forward to more conversations during the week.
Thank you, Hini. Have a nice one.
You too. All right, so that's it. In New York, you can expect that we will keep you abreast of every conversation. And the issues around fairness in international financial architecture is not a new one that has to do with IMF and the World Bank and credit agency. These are issues that have been out there in the front burner, but we'll see what happens at the end of UNGA 2024, if there'll be anything new. But talking about, the global south and the Western world, let's see how we can improve that relationship between Nigeria and the UK. But this time around, we're looking at the private sector. And we have joining us right here in the studio, the chair of UK Institute of Directors, Africa Group. Right here in the studio is Mr. Joe Popola. Mr. Popola, good afternoon.
Good afternoon.
Yeah,
It's a pleasure to be here again. Thank you so much for having me.
Good to have you. So the thing is, when we talk about relations between African countries and the Western world, mostly it seems that there's exploitation there. And then it seems like what happens mostly is the global south imports. You hardly see where they're exporting. So now I guess we can discuss. UK is a good friend of Nigeria. They colonized Nigeria and all of that. But we're looking for how to maximize that relationship for Nigerians, especially the private sector at this time. What has been your view in trade relations, services, and all of that?
Thank you so much. I think the trade relationship between Nigeria and UK has tremendously improved. I think the past Prime Minister of UK, Boris Johnson, started this trade and investment forum between the continent and the UK. And UK also is the first country to sign the agreement with the African Free Trade Continental Group. So they are the first country to do that. However, when we look at this volume of transactions or volume of trade between UK, especially with Nigeria, and when you compare that with what China is doing or compare it to what even Netherlands is doing, we will still think that UK can still do more. And one of the ways where we can do more with the United Kingdom as a continent, Africa then narrowed down in Nigeria, is we can use the business forum. I think more often than not, when we have a big event, big summit, trade summit, the nitty-gritty of it is supposed to rest on the business forum from Nigeria and perhaps maybe from the UK, where we have the British Chambers of Commerce, we have CIB, Confederation of British Businesses, we have Institute of Directors. Those are the people that will now sit down and look at what kind of arrangement can we have with Nigerian side or from the UK side. The government is there to open the door to start the conversation around trade and investment. The business forum are there to really go to the details. So, and one of the things we have been doing in the Institute of Directors Africa Group is we work with all the African diplomatic missions in the UK through their embassies and trade desk to understand the trade and investment need of each of these countries. Then we distill that to over 20,000 business leaders in that membership and see what is the priority of these business leaders in the continent of Africa. We were here about 3 weeks ago when we launched.
But would you say that the Africans, Nigerians, Africans are ready with products and services that can attract You know, because even there's been a couple of exhibitions and meeting, and we see companies in UK coming to Nigeria with their products because it's believed that all Nigerians are big spenders and all. How do we reverse that trend to get the UK to also spend on Nigerian goods and services?
The landscape is changing. About few months ago, maybe about 3 months ago, there was this trade mission organized by the House of Lords, led by Lord Poppert, to DRC on semiconductor. We could see UK is much more pushing forward now after Brexit compared to what was happening pre-Brexit era. So I'm aware of some other companies that are really interested in Africa, but the country has to be competitive. The business leaders are really out to make profits, and then they will look at, why should I invest in Nigeria and not in Ghana or in South Africa or not in Dubai? Or it's because every country in the world wants foreign direct investment. And I think one thing Nigeria should need to do is we should stop thinking that we are competing against ourselves. We need to think that we are competing with other countries. And therefore, we need to make our business environment attractive to business leaders across the world. Not only in UK, we need to convert investment from India. India is one of the third biggest economy in the world now. I know we are doing a bit well with China. I know we are doing with the US. We need to make sure we're attractive to all the countries in the world and be the first point of call when people are making serious investment decisions.
And we look forward to having, we just saw our trade surplus, but most of it was crude. You know, meanwhile, we do have a lot of potentials. And we have a lot of news where, not mentioning any country now, take raw materials from here, be it in the solid minerals and all of that, and of course, the value is really reduced and all of that. But I guess it's up to Nigerians, maybe not just the government, but also the private sector, to sit up and be able to add value to raw materials before or make it attractive for other countries, other nationals.
Absolutely. As a student of cost accounting, when you have a raw materials, you are the lower herb of the supply chain. It is when you add value to it that you can actually get more. So I absolutely agree with you that Nigeria don't need to have big manufacturing industry, but we just have to be serious part of the global supply chain. When you look at any items in the world, even if it is just 2% of it, be processed in Nigeria and sent abroad for final product. Apple sources product from almost 43 countries in the world. Are we part of that supply chain?
And we do have the potential for those raw materials. We do have the raw materials.
We have
a lot of it.
We have the natural resources. Most of the natural resources are used for this iPhone. You can look at the semiconductor we are talking about. We can look at lithium for the EV vehicles. We have lithium in Ibadan. What are we doing with all these natural resources? And that is why we will want to collaborate with private sectors in Nigeria as the Institute of Directors Africa Group to collaborate with private sectors in Nigeria and the government. We hosted Governor Sanwo-Olu in, I think we hosted him in 2021.
Yeah, but before you go on, do you see, because when you talk to a lot of people in this line of conversation, they do tell you that policy inconsistency is a threat, enabling environment is another threat to it, bureaucracy and lack of transparency in processes is also another threat.
I totally agree with you, but there is something that is also in support of the emerging market like Nigeria. Even the big company of this world cannot do without the emerging market. They know that.
Yeah, this is where the market future is.
That is where the future is. They know that, but we could do a lot from our side to make these things very, very attractive to all the countries in the world, to all the investors in the world. We need to regulate our tax system. We need to make sure we have a fantastic enabling environment. We need to ensure that our legal system is fantastic. We need to ensure that we obey law and order. So all these things are really important to investors and also to business leaders.
Yeah, well, these are issues we have to deal with And nobody will deal with it for us.
Yes, we have to. It is, observation is in our hand. Yeah.
Thank you so much, Chair, UK Institute of Directors, Africa Group, Mr. Joe Okokola, for your time and your views.
Thank you so very much, Aini. Nice seeing you again. Thank you so much.
Yeah.
Thank you. Yeah.
All right, now let's take a break. When we come back, we'll head to the market right here on Business Incorporated on Channels Television. You're still watching Business Incorporated on Channels Television. Let's head to the markets now, where Will comes in with the color red, unfortunately.
Well, I'm not being on red, but the red is on the screen. You have a shade close to this, but I don't want to start going into colors right now.
Wow. Tell me about color blindness.
Yes. No.
Tell me about color blindness.
I want to put you in that category right now.
Okay.
So let's just say that, Ini, you caused this. And okay. I put it to you, like Ladi was saying,
I'm that powerful.
Of course. Mr. Iwani did say that when you have that tint, even if it's a tint of red or something close to it, the market responds to it. Okay. So that's how powerful you can be.
Thank you for assigning such powers to me.
You're welcome.
But it's so sad that we've lost the 98,000 level.
Yes.
I mean, when we had intraday losses yesterday, I had hoped that by the close of trade, that we would have recovered. Unfortunately, we went deeper into the red zone, and even this afternoon, we've gone even deeper. I don't know if I should hope that there'll be a recovery before close of trade.
Possibly maybe bargain hunting, but we see investors taking down on FBN holdings. Profit taking is still there. We see Northern Nigeria flour mills also going down. We see Dangote sugar also weighing on that index. So investors are selling off on some of these consumer goods
weekend,
stocks
I guess.
Some banking stocks.
It's weekend.
Oh, yes, you reminded me. I forgot.
What do I know?
So let's check out markets in Africa. Major stocks at intraday. Sentiments at the Nigerian NGX was down. It was lower by 0.2%. Seeing sell-offs, as I mentioned, in Dangote sugar and some banking stocks that weigh the index down. We look at it on the flip side. We see the South Africa's GSE is in the green at intraday. It was up 0.44%. Let's look at Egypt. EGX was closed Thursday, but closed in the green 1.69%, still at 30,000 level. And Kenya closed Thursday's session in the red 0.17%, hoping that they would make a rebound by the close of business today. But let's talk about what's going on and what's driving sentiments at the NGX. We're seeing news about PZ Cussons, but we have Onose Asotie Inaolo, investment analyst, Main Street Capital, to dig down on that for us. Good afternoon, Onose. Sad news. Well, it's not news that the market wants to hear right now, but PZ Cussons, the parent company of PZ Cussons Nigeria, has concluded plans to sell its African subsidiaries, citing depreciation of the naira as a major reason. That's FX, the big elephant in the room. Well, elephant is big anyways. And this is adding to the list of multinationals that are exiting Nigeria. So one of the giants, what impact should the NGX be bracing for when this company eventually exits Nigeria? What would it mean for the NGX?
Right off the bat, there will be like a depreciation in the, if they are going to sell it, you most likely would see them buy off all the shares, so it might now, depending on how the deal is structured, it might delist from, the NGX exchange, which is, just low-hanging fruits, the most obvious thing that will happen. But one thing that's really a bit more, should I say, concerning is PZ is a household name. They have, brand power, they have the goodwill, they have the distribution network, in Nigeria and everything. And if they are struggling this much to the point of the parent company having to sell off the subsidiary due to, tremendous FX losses, then now looking to other, consumer goods companies that are facing similar similar issues, similar FX issues. It's not a thing of, okay, so the ones that seemingly have not come out to the point of saying, okay, they want to sell, it's now, analysts, we now have to start asking ourselves, how bad is the damage? Because now we knew that, there was some damage from, FX, the FX losses, but so far, nobody is coming out to say, okay, you know what, it's so bad that we do not really want to do this anymore. The worst we've seen is our companies like Procter and Gamble that are leaving Nigeria. But then now it is the question of how bad is the damage going on, and other companies, should we not expect even worse situations going forward? Because then you might think, okay, we might be out of the brunt of the shock which happened last year. So maybe as time moves on, other companies begin to recover. But if a huge company like PZ is saying no, they're at the point where they want to sell, then looking to other companies, how bad is the damage to their financial sheets? And then moving forward, should we now expect similar degrees of damage from other companies? And then the effect that all of that will now have on the NGX is what I am even really more concerned at this point, even beyond just the specific singular sale of PZ.
It's quite sad, but what I just want to know, if inflation, let's look at inflation right now, is tapering 2 months now, and we're looking ahead for the MPC meeting next week. If we see a hold in that, maybe they come out with an announcement that they're holding rates, is this going to help in any way, especially if cost of borrowing doesn't keep going up, inflation is going down? And the FX possibly will see a steady in the Naira. What do you see? Is there any chance that these consumer goods companies may not go down or plan to exit if they're multinationals, or if they're local companies, they might not see a continued downturn in their production or their revenue turnout?
Well, so yes, inflation has we've seen this inflation for the last 2 months. I think the best case scenario, even with the MPC meeting coming up, is best case scenario they hold rates, because I do not reckon that now that they have possibly begun to see some effects from all the rate hikes that they've been doing since 2022, 2023, that because we've seen 2 months of disinflation, that the MPC will come and say, okay, now I want to slash rates. So I don't think slashing rates is even on the table. Now, if it happens, it will be very surprising. But in the worst case scenario, they hold rates, because even the CBN right now has a lot of incentives to keep rates stable. Even if you go into a fixed income, then that's beyond the scope. But if they hold rates, these companies still have a lot to battle through. Because one, the damage has been done. For a lot of these companies, their equity has been completely eroded. For PZ, they were like a negative 27 billion in equity. So now, even if they can't keep their revenues up, they still have a lot of economic challenges, economic headwinds that are still present despite lower inflation numbers. Like one, transport costs. Transport costs are still really high. And with everything that's going on with Dangote and the plan to sell fuel at possibly even higher, even if they do buy from Dangote, that cost might not go away, right now. There's still the issue of, maybe issues getting raw materials. For FMCG companies, they might need a lot of raw materials from to import raw materials. And so there's still the FX situation. So even if we do see inflation, we do see disinflation, and even if the MPC keeps rates the same, a lot of the factors that are still messing up, these companies, businesses, those factors are still there. That's one. And two, they now have to still deal with the current losses on their books, that they're currently nursing. So, even if inflation starts to go down, starts to trend from now to the end of the year, it's still a long battle for a lot of these companies to even get to break even.
Okay, we do hope companies will consider backward integration. Probably that will double down on that, and we'll see a change in the situation. Thank you so much, Nonsa Sotia Inaolo, investment analyst, Main Street Capital, for sharing your thoughts on Business Incorporated.
Thanks for having me.
So let's look at other markets now in the Middle East. Major stocks were closed Thursday, except in the UAE, where sentiments were mixed. Intraday, we see Abu Dhabi down massively, nearly 8% there. We're looking at what's happening there. Then Dubai index up 0.08%. Let's look at other markets now. We said it was closed. Tadawul in Saudi was closed Thursday, up in the green, 1.34%. Qatari was also up 0.55%. US markets We're seeing that trending up, especially for the Dow Jones. It crossed the 42,000 for the first time ever. And, the markets are reacting to the U.S. Fed cutting rates by 50 basis points. Other global markets are also celebrating this. Some analysts are saying it came too late, but never too late for the markets to react to good news. So let's see Asian markets very quickly. The Asian market, we saw that market, Nikkei, was 1.53%, closing today's session, but down from 38,000, but climbing up because it was at 36 this week. Now, Kospi in South Korea up 0.49%, closed today's session, and the Hang Seng, as in China, 1.36% up. Let's look at Shanghai market to see that in mainland China, it was up 0.03%, and in Nifty in India was also up 1.2%. So the markets are really celebrating the U.S. Fed cutting rates, and this is reflected in the green closes that we have seen. The Nikkei is picking up, recovering, rebounding from all the losses that they had. And I just hope that Nigeria's market mirrors this and not go in the red, because we are seeing other markets celebrating the U.S. Fed rate cuts.
I don't know why you had to go that way. You should be patient. We have our own meeting on Monday and Tuesday. That is going to feed into our market.
Okay, that will feed into the market. But the U.S. has a way of influencing other markets.
All right, Will, thank you so much. Well, let's head to Berlin now, where, it's good news for tech and gadget fans. iPhone 16 is being celebrated, and there were restrictions before, but now we do hear that Apple's latest iPhone is now being advertised in Moscow. We know the relationship between Russia since the invasion into Ukraine, but let's get more details on this with Lars. Lars, what should we know about this?
Thanks for having me, Ini. Yes, this is quite a story. Russia's leading electronics retailer, M-Video Eldorado, and mobile network operator MTS have both claimed to be the first in Russia to have Apple's new iPhone 16. M-Video says deliveries would begin next week, and MTS said it expected physical sales to begin very soon. Now, stating the obvious, Apple has paused all its product sales in Russia in March of 2022 and has also halted services like Apple Pay in response to Moscow's invasion of Ukraine. And that's obviously not just an Apple strategy. This is simply part of the West's policy of sanctions against Moscow, sanctions that have banned the import of Russian goods. That was mostly energy, of course, with gas, oil, and coal making up the lion's share, but that have also banned the export of any goods, cars, machinery, and also technology to Russia.
Yeah, but in spite of these restrictions, how do these phones get into Russia?
Well, it seems clear that these products are simply routed through countries that have not imposed sanctions on Russia, such as Turkey, Kazakhstan, China, India, and the United Arab Emirates. It's been known for a while that some countries have been more than happy to play the role of middleman and support Russia. There's even, I want to say, proof for that if you just look at some recent trade numbers. Since the West has banned exports to Russia, the sale of some goods to Kyrgyzstan has actually jumped by a whopping 1,700%. Sales into Kazakhstan are up 333%, and even sales of certain products to Turkey are up over 70%. And local economic numbers there don't actually explain that kind of demand. So it seems pretty clear that goods are just transiting through these countries. And that, of course, has a price. And we see that with those iPhone announcements. The Russian electronics retailer says the smaller version of the iPhone would sell for the equivalent of $1,225. That would be just about $400 more than in the US. The 1 terabyte Pro Max is offered at the equivalent of over $2,700, and that's over $1,100 more than in the US.
All right, well, let's look at investors for today. What are they doing or thinking?
Well, markets are generally in a good mood on this last trading day of the week, likely still celebrating that U.S. rate cut. But there's actually been some more central bank action now, with the Bank of Japan keeping interest rates steady, which had been expected, and the Chinese central bank also keeping rates unchanged, which was a surprise indeed, as many investors had expected a rate cut from Beijing. Next week, we'll hear from the ECB, the European Central Bank, in Frankfurt. So it seems interest rate policy is still the one topic that will continue to dominate markets today and over the next couple of days.
All right, Lars, thank you so much. Have a great weekend. Now let's come to Africa, where a plan to bring electricity to 300 million Africans by 2030, backed by an initial pledge of $30 billion from the World Bank and the African Development Bank, has begun to be implemented with assessment of the first potential beneficiaries. Some of the world's most prominent climate organizations, like the Rockefeller Foundation, Global Alliance for People and Planet Sustainability, Energy for All, they announced the formation of a technical assistance facility to examine secure funding for those that qualify for the program, which is known as Mission 300. The aim is to ultimately raise $90 billion or more from a range of sources. The plan, if successful, would bring power to half of the 600 million Africans who don't have access to electricity. The continent accounts for about 3/4 of those without power globally, with South Sudan, Burundi, and Chad having electrification rates of less than 12% of their general population. That limits productivity and hampers economic growth in some of the poorest nations on earth. A new Turkish factory has been officially inaugurated in 10th of Ramadan City, located east of Cairo, that's Egypt, with a total investment of $110 million. The facility is expected to produce 1.5 million home appliances annually, with 60% of its production destined to export market. This development marks a significant step in the growing economic cooperation between Turkey and Egypt. The launch was highlighted by the Egyptian-Turkish Business Council, whose chairman confirmed that additional investment in the industrial and contracting sectors are anticipated in the near future. This comes on the heels of recent diplomatic progress between the two nations, which have sought to expand the economic and trade relations following a series of high-level meetings between their leaders. During Egypt President Abdel Fattah el-Sisi's visit to Ankara earlier this year, both countries committed to significantly boosting bilateral trade, aiming to reach $15 billion by capitalizing on available economic opportunities. This renewed economic partnership was solidified with the signing of 17 memorandum of understanding across various sectors, including industrial, investment, education, healthcare, railways, agriculture, and renewable energy. Still in Egypt now, the Minister of Investment and Foreign Trade, Hassan El-Kutabi, has outlined the government's economic strategy, which prioritizes attracting foreign direct investment, diversifying income sources, bolstering the private sector, and modernizing regulatory frameworks. The minister emphasizes the government's commitment to assess the country's economic challenges through strategic initiatives aimed at stimulating growth and ensuring financial stability. Key sectors identified for target investments include energy, infrastructure, manufacturing, and information and communications technology. To create a more conducive investment environment, the government plans to enhance competitiveness, streamline procedures, and foster stronger partnership with the private sector. These measures are expected to attract foreign investment and support local businesses. The minister highlights ongoing reforms in the non-banking finance sector and investment opportunities available in the area. He emphasizes the government's dedication to achieving Egypt's Vision 2030 by implementing economic reforms and providing stable investment-friendly environments. So for our DSTV viewers, we need to head to Akwa Ibom State now. We have a special event for you there, the launch of Akwa Ibom State Health Insurance Scheme. It's called Arise Care. That's going on there, the flag off of the Basic Healthcare Provision Fund. That's going to be going, that's for our viewers on DSTV. Meanwhile, for our other platforms, for the UK platform and the local platform, we'll continue with Business Incorporated. All right, moving on now, we head to the Reserve Bank of Zimbabwe. They've injected $64 million into the foreign exchange market in response to a growing demand for hard currency, ensuring that all bona fide foreign currency applications are met. This comes after a recent surge in demand temporarily strained the market despite a $50 million injection in July. The governor of the bank, RBZ, emphasizes that the $64 million would help absorb excess ZiG liquidity and strengthen the stability of the ZiG currency, which was introduced in April as a reserve bank currency to replace the Zimbabwean dollar. Zimbabwe's foreign exchange market now operates under the willing buyer, willing seller system introduced alongside the ZiG in April. The system allows market-driven negotiations of exchange rate in contrast to previous currency auction system. The Republic of Rwanda has donated 1,000 metric tons of maize meal to Zimbabwe, which is currently facing acute hunger owing to an El Nino-induced drought. Rwandan ambassador to Zimbabwe, James Musoni, highlighted the growing bond between the two countries, emphasizing that the donation reflects their unity and shared commitment to mutual support. Mr. Musoni says that the government of Rwanda is responding positively to a clarion call for support by the government of Zimbabwe following the 2023-2024 El Nino-induced drought that has affected 7.6 million people. And the Embassy of Japan gave Uganda a grant of more than 1.3 billion shillings to strengthen her emergency and disaster prevention systems. The funding is being availed under the Grassroots Human Security Project scheme administered by the Embassy of Japan to support community-based development schemes. Let's head to the crypto space now and see what's going on there. Some things are brewing from the story around CBAN to something I think going on from Binance launching features contracts and a whole lot more. Now, let's head to that space. Let's see what's happening. Yesterday, Larry Williams was very proud of this market. It was a whole lot of green yesterday. Well, it hits not a new high since we've been here before, but well, a huge recovery, we could say, from about 62,000. I think we had that at the close of the day yesterday. The trade doesn't close yet, but for the last 1 hour, we see more than 2% increase at 63,558.01. Ethereum is also looking green, but we do have pockets of red today. Unlike yesterday, it was very, very green. I wonder if it's still the after effect of the Fed rate cut. But let's talk to Olumide Adesina now and find out. Perhaps that's still what is driving this. Hi, Olumide. Good afternoon.
Thanks for having me.
Great. So can we say this is still the spillover effect of the Fed rate cuts?
Definitely. The appetite for risk is being elevated after the US Fed surprised the market by 50 basis cuts. But having said that, you look at the fundamentals right now, as we speak, you see that Bitcoin is consolidating around the 63,500 mark. And pretty much what it says is that it's still looking for key drivers to be able to elevate it above 65,000. And looking at the US stock market futures, it seems that the market is slightly down. So it's possibly that the bulls will lose support above the 63K level. But having really said that, I think dynamics in the market has shown that Bitcoin has been the favorite among traditional investors. If you look at the year-to-date return this year, it's hovering at around 46%, while Ethereum still has little positivity despite gaining about 6% this week. So for callers, I think it's fair to say that Bitcoin is here to stay. Meme coins, very volatile. The top 10 meme coins this year are still down by more than 50%, despite the introduction of many fundamental structural assets like Doge, the third blockchain, the Solana ecosystem ruled by Bonk, and the rest. Is still been a very volatile situation. So I think what will make the difference in going forward is the US election. A Trump win definitely will stamp the bulls in authority, but it looks like, according to polls, Harris still has the card on her, and that's why the market really can't be on the run we see in March, April.
Yeah, well, the U.S. moves everything, I guess. Their rate cut has moved the market. Now we're counting down to election, and we'll see where it ends and how it moves the market. But apart from the U.S., in Germany, the government has shut down 47 crypto exchanges in a crackdown that they call illicit activities. I mean, this distrust of the crypto, sometimes in some cases, it does appear justified.
Yeah, the reality is that, government definitely wants control. And if you look at the fundamentals around the crypto market, the theme is decentralized finance, despite the fact that many altcoins and structural exchanges have this centralized structure. So what we are saying is that while the government is being tactical about it, some ecosystem are being blunt. So if you look at the Europeans, particularly the Germans, the French, and the English, they phased out dollar-based stable coins in place of European staples because they feel that they can easily control euro-related crypto assets than the USDT. Also, you look at the fact that the Germans sold their Bitcoin stash rather than holding it like the Americans, telling you that they are less interested in the speculative assets. So yeah, you could say that there's still pessimism around, but when you look at 10 years ago, I think there are a lot of improvement. Nobody would have seen templating BlackRock, Goldman Sachs, JP Morgan, and having exposure in the crypto market. So it's still an early market, young market. Particularly, the market is less than 30 years old. So you definitely can't expect all this acceptance at once. But I think what will make the difference is who wins the US election November 4.
All right. Okay. So I still in the United States. Thank you so much, Olumide Adesina, for your thoughts, and do have a great weekend.
Yeah, thank you for having me.
So it seems the US still controls everything, yeah, in spite of the message of de-dollarizing the world. Anyways, they have the economic power now, so I guess we might have well accepted. But that's how much we can do on Business Incorporated today. Thank you so much for being a part of it. It's been pleasant having you there, sharing information and all of that from Monday till today. The cycle starts again on Monday. I do hope you will join us then. Remember to join Laddie Williams tomorrow, 7 p.m., Capital Market on Saturday. He'll take you around the market, summary of trading for the week. For me, I wish you a great weekend, a restful one. I'll see you on Monday. God's grace. Bye-bye.